Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. I want to give a big hello to everybody out there in Cyberland. I think that this is going to be an interesting experiment today. We're going to go live on several different platforms. We do have some good market analysis lined up for you on what I would call an absolutely dead and ugly Monday. You'll notice that today we're looking at Momentum Monday. I'm going to talk about the psychology of how to start your trading week off right. We're also going to get an update on our trading competition, where exactly the leaderboard stands. And also we're going to look at some price action and get you into some good early week trades. I have to be honest with you, right now this is an absolute snooze fest. I'm looking at the Dow is up about 100 points. The S&P is relatively flat. The NASDAQ is off about 1%. So a little bit of choppy action. A lot of that has to do with durable goods and just traders getting back in the saddle after the weekend break. So I want to welcome everybody to the room. If you've never seen a stream before, buckle up. If you bring all your questions, I'll be sure to answer them. I'll do the best I can anyways. And if I don't know the answer, I'm not going to lie to you. I'm just going to tell you I don't know. In any case, right now, I want to get right started real quick with some great price action. This is good stuff right here. This is to really close last week's trading week here in the Great Britain Pound USD. Nice big, really a nice big directional move, and then sort of a flat trade. This is textbook long for me. This is a textbook situation where I'm looking to go long. 4-hour chart, really my bread and butter when it comes to the Forex. I'm looking at daily and 4-hour charts. Mark Gorp, good to see you. Mark Gorp, Bobby Bob, always welcome, guys. Welcome back to it for another week. We're going to see if we can stack up a few green pips. Can't really tell a lie. Last week was very good. I think this week's going to be pretty good as well. In any case, right here, this is a good price action. You can see we've got just a nice pullback really inside of that 4-hour bar that was sort of the guts of the U.S. session from last week, last Friday, and then we've just have traded absolutely sideways on the open. So it's very slow. When I see a slow market, I love my support zones. There's an old axiom. JC, good to see you. There's an old axiom in trading, and it's an old trader's thing. I came up with pit guys. I came up with the guys that were out of the pit that made lots of money in the pits, and they always said, hey, listen, Shane, never sell a dead market. And I was like, why? Markets can go up or down. Who cares? Never sell a dead market. This is a dead market, and you'll notice right here the bidders that have gotten involved from 131.83, this 38% retracement of this 4-hour range, they've done very well. They've done very well. Now, it might not seem like much. Oh, Shane, they've only got 10 or 15 pips. Yeah, they got 10 pips twice, though, 15 pips twice. And when you do get that going, you start boosting that leverage up, and all of a sudden you walk away up a couple grand on a day that just doesn't look like much is going on. Sayed, good to see you, Sayed. I'm doing very well. I'm back in the saddle for another week. This is week 35 of the year, so I feel pretty good. I'm ready to roll. This is a good trade, though. I'd be watching right here at 31.83. If we do in fact get a test of that zone, we're going to definitely be looking to go long again. I don't see much on the economic calendar that's going to shake us up. We had durable goods this morning. We have consumer confidence tomorrow, and I'm going to unpack all that stuff as we get going here in the live stream. If you're brand new to the trading room, we got a couple of things we need to go over first. Compete in our trading competition and win your share of a cool 10K. If you haven't joined yet, remember this thing runs through the 11th of September. Join the competition now. Get in there, get in there, understand the ropes. Open up your demo account with Switch Markets, our brokerage partner that's sponsoring this contest. Get in there, get going, because we're going to be kicking off another contest relatively soon. And the sooner that you're up to speed on how everything works, the sooner you're going to have a chance to win this thing. 5, 3, and 2. Top 3 are going to take home some money. We have 4,500 participants, which I got to tell you, I mean, the odds aren't bad. I know it sounds bad. Well, it's 4,500 to 1. Well, I mean, maybe it is, maybe it isn't. What I'm saying is a lot of these contests that put up that kind of cash have about, I don't know, 10 or 15 or 20 times that number of participants. I like the odds myself. I would take a shot at it if I was you, but I'm not you, and I can't participate either because I'm an employee at How to Trade, so I'm out. I don't get to play. But this is where we're at right now. Olive's putting on an absolute clinic on how to trade. Realistically, haven't seen too many trades out of Olive in the last 3 days, though. Sort of just keeping an eye on the open positions and management, but definitely running away with this thing. With a couple of weeks left in the competition, I would say that Olive's the one to beat. Now, there are going to be some changes in the future to the way that these contests work. The high-frequency traders are going to be able to trade, but perhaps in a different league. We're going to sort of break things up so that the average retail traders, maybe somebody like Fazlim, who's killing it, 2,400% on just 41 trades, took a 69% drawdown. That's fantastic. But maybe a high-frequency trader like Malto, who's gone 11,500 trades. I got to tell you, probably 10 years of trading, I probably haven't executed that many trades on crude oil. Well, that's not true. I probably executed about 3 or 4 times that. But I will tell you that is a staggering number of trades. And for only a 3% drawdown, this is the kind of thing right here that institutions definitely want to do. That's high frequency trading at its finest. Very little risk, very little drawdown. Absolutely huge profits. And then what do you got? 11,500 trades. That makes my wrist tired just thinking about entering that many trades. So it's definitely some sort of automated approach. But that's what these contests are all about. It's to find out, hey, you know what? Maybe we start looking at what these folks are doing to win. Maybe we say, hey, what did you guys do? How are you doing that? And try to maybe learn a little bit. That's what contests are all about, getting up to speed, understanding what it takes to compete. Personally, I like to go about the 5th page, maybe the 6th page deep, and take a look at a few returns that are more doable for your average retail trader. This is making a living right here. 12 trades, 25% drawdown, up 109%. So if you went in, you're up 109%. Let's say you went in and you were serious about your trading. $20,000 down. I want to trade. I want to make money doing this. You doubled your money. You're up 20 grand and you only took a modest draw of about 4,000 and you took 12 trades. Slippage isn't an issue. Commissions aren't an issue. But what's an issue? Making money. And if you just doubled your money, 20,000 in a month, that's not bad. That's called making a living and walking away relatively rich at the end of the trading year. So I wanted to start off with a little bit of a recap of our leaderboard because it is important, but not as important as the US dollar. This is sort of the straw that stirs the drink. Right now, we're seeing a major move. This was a major move here that we've had in August. Now, the reason why is because our interest rate expectations have really shifted from maybe data dependent to maybe going into a serious rate cut cycle. That's forced the dollar down. And what has it done? Well, it's really brought stocks back from the dead. I put out a trade idea on the S&P 500 earlier today. You're going to want to check that out. It gives you an idea of exactly where the S&P are and how to trade it. But this big time pullback here, we're in a situation where we're going to be looking to buy the dip probably in the US dollar, but we're not there yet. Now, if you take a look at this month's low is right at 100.53. That's your US dollar index. I would definitely have 100 marked. That's a big round number. It doesn't get any bigger than 100 round for a downside support, natural support zone. There's going to be some bidders there. So if you're playing trends in the majors against the US dollar, keep an eye on this DXY. Once we get down in here, I expect this chart to get a little bit dirty, and that's probably where I'm going to make my money. That's what I'm planning on. Right now, I'm betting against the U.S. dollar, though I don't see any reason to back it. I think it's an incredible mistake to step up and expect the USD to rally right now, and I'm going to tell you why here in just a second. 98, 97, that's an absolute monster level. So I got the question last week when I threw this Fibonacci retracement sequence out there. It said, Shane, why did you do this for a Fibby? And I said, well, you've got a low down here, which is January of 2021's lows. What happened in 2021? Think about it. You're coming out of that COVID era where things are absolutely insane. You saw the big spike in the U.S. dollar when everybody ran to it in March of 2020, and then you saw the dollar really weaken when all that unlimited QE money was hitting, the stimulus checks, the loans to banks, the loans to businesses, all that money got recycled into the economy, and now what do you have? Well, you have a situation where we know that rates are going to have to start going up. And we knew that as early as January of 2021. It didn't start in effect really until the following year. But take a good look at what you had here. We knew that the U.S. dollar was going to get traction as the Fed started hiking interest rates, and that's exactly what happened. Then we sort of topped out. Then we got deeper into our tightening cycle, and since then we haven't really done much. I think that this was probably the most important period in modern monetary policy history from the United States Federal Reserve, was coming off of those post-COVID lows, and that was the line in the sand down there right around 89.12 when they said, hey, listen, we can't devalue the U.S. dollar anymore. We're going to have to start pumping this thing, and that's what we saw. We started seeing the compared to where we were during COVID, we started to see that money supply contract. And that was the idea. You still got the inflation, though. And I could write a book on that. Maybe I will. In any case, you got this big rally. Now we came off, and we just sort of been rotating between right around the 50% level. 50% of that range, it's a huge range. It's important. Now we're starting to look for a deviation from 50%. Now, 50%, we all know that. You flip heads, you flip tails, 50%. That means I don't know what the heck's going to happen. 50%, maybe it goes up, maybe it goes down. That's one reason why I don't trade the 50% retracement. But 62%, we're going guns up from there. So as soon as we get an opportunity to bid this pullback, that's exactly what's going to happen. You'll notice that I also have that spike low from July of 2023 located on my chart. And the reason why is that's 2023's low. So I'm looking for something like this zone right down in here, which is going to be from 99.57 to about 98.70, 98.97. That's going to wipe out all the retail longs, and then we'll start to maybe build a case for that U.S. dollar to stabilize against the majors. That's what's going to happen here. I can't say it's going to happen for certain, but I think it's coming our way. Once again, I thank you for all your private messages. You're going to have to just be patient with me. Mondays I'm always swamped with an absolute ton of them. I'll be sure to get back to you right after this live stream, though. In any case, Aussie CAD. Love the Aussie CAD. The reason why I trade the Aussie CAD almost religiously is why, or I'm at least referencing it religiously. Why? Because it is a commodity pair. I'm a commodity specialist. I trade crude oil, gold, and the E-mini S&P 500. I trade futures contracts, but that's okay. The Aussie CAD, if you're a Forex player, gives you fantastic insulation from the U.S. dollar. At least you only have indirect exposure, meaning when the gold goes up or the crude oil goes up, those are all linked to the U.S. dollar. That's fine, but they sort of offset, meaning the gold backs the Australian dollar, crude oil backs the Canadian dollar, and that in this way, this is the true commodity pair. I love commodities. I don't really see much opportunities like commodities trading in the market each and every day. And right here, what do we have? Well, you got a weekly chart. I really like this volatility. Nice big touch of my upper Bollinger Band. Came down, sort of faded. I would call that sort of a hammer formation. And now you've got a chance maybe to buy a pullback. A nice big 3-week rally coming off of those lows. The way that we're going to build this is just going to go spike low here. Spike high here, and I'm looking to bid pullbacks pretty much all week long. If in fact we do get an opportunity there, we've got a moving average. My 13 week EMA is at 90.92. Love it. I think that's a great area, and if we extend down there, that 90.67 area, that zone, that probably 25 pip zone, that's going to be a monster. I would be shocked if this market takes it out, especially with no real market movers looking for the Australian dollar, Canadian dollar. Watch crude oil, watch gold. That'll pretty much give you the template to trade the Aussie CAD. Thank you for the message. Great, David. I'll get back to you right after the stream. But you do have this going right here. This is good stuff. I really like this. Now, you say, Shane, okay, I want to trade right now. I said, well, if you want to trade right now, I'd be looking to maybe the pound dollar. Euro USD, this is always a good one. But once again, we pretty much missed the trade. Unfortunately, our timing isn't always the best on these live streams. But there it is. I mean, spike high, nice big rally there. Pushed a little bit higher on yesterday's electronic open, pulled back, went to 50%, and we've rallied from there. So 111.52 is more or less, 111.50 is going to be your swing low here, 111.49, and then your bounce right back up to 74. So if you wanted to trade the Euro USD, you could definitely be bidding 111.65, somewhere in there, or wait for maybe a 111.41. The market just hasn't really done much, but I love this market structure. We have some Elliott Wave practitioners in the room that are very, very good. They would break down all these wave counts for you. Just looking at this big move, 1, there's your move, there's your 2, 3, 4, 5, maybe we get that. It's tough to say. Remember, when you're doing Elliott Wave, at least the way that I do it, which is very simple. I'm not a statistician. I'm not the smartest guy in the room by any stretch of the imagination, but I do understand this with Elliott Wave. 1s, 3s, and 5s move right there. There's your break. There's your 1. There's your pullback 2, 3, probably a pullback 4, and then a 5. If, in fact, that structure sets up, we'll know relatively shortly because this will be pretty much your swing low. So if you wanted to bid from down in here, I would say, okay. If you don't want to bid, I understand that too. Remember, it's Monday. Monday psychology is absolutely paramount that we get off on the trading week on the right foot. So here's what we have on tap for you. Week 35. Today was durable goods orders. That's going to be our fundamental of the day. We're going to look at that right now. Tomorrow, CB, consumer confidence. We're going to dive into those. Consumer confidence is very important. We really got an incredible group of numbers that came across the board for us last week with that existing home sales. Is consumer confidence back? Well, maybe not. We're going to go ahead and take a look at that tomorrow. EIA crude oil stocks for Wednesday, a relatively quiet Wednesday session. There's a few other numbers from the Eurozone that are coming out. We'll recap those in due time, but I'll pretty much just punt that away to Connor's expertise. He's much better versed on happenings in the EU and the UK than I am. I'll be sure to let him handle that. Thursday, U.S. GDP. That's going to be a big number because there's a lot of talk about recession, and a lot of folks are waiting for an economic pullback. Can we get that? I think we can, especially if we revise these GDP numbers down. And there's been a lot in the news about downward revisions and a lot of questions surrounding governmental agencies that are, in fact, really bringing numbers to the table that aren't exactly accurate. NFP has been a fake all year long. I've been saying it all year long. We found out last Wednesday that they they overreported new jobs by 810,000 jobs in the United States. And we didn't even get into how many actual jobs that were created from the government side of things. It was a terrible report, and it didn't crash the markets, but it brought short-term volatility, and it's the precursor for what many think is going to be a recession, including this guy right here. So we're going to wait and see what happens. And then Friday PCE price index, that's the biggie. That's the one that the Fed looks at for their inflation metrics. That's the one that we really have to watch. That U.S. dollar chart that I just showed you, we may get some reaction there for the PCE. So something to think about there. All right, let's go ahead and dive into our fundamentals of the day. But first, let's go ahead and go to Monday psychology. Now remember, Monday psychology is very important. It's very important that you get off on the trading week on the right foot. All right, when we show up Monday, there's a couple of different mindsets traders typically have, and I'm no exception. I've been doing this since 2011. I'm no exception. Every Monday, I either have two mindsets. Either number one, I'm tired from the weekend and I don't want to do anything and I don't want to trade, or number two, I'm so excited to get to the markets that I want to run in there and start trading guns blazing. If you're brand new to the markets, you're probably number two. If you're a lot younger than me, maybe you're a millennial trader or you're in your early 20s or maybe your early 30s, then you probably want to show up on Monday and make your fortune. And that's great. I love it. That means we have a lot in common. You're tough. You're ready to go. You're motivated. You want to build your account. You want to win. You want to do all these things. But you got to be right. You got to be right with the markets. You can't go in there and push it around. You can't try to push price. You cannot go in there every Monday, guns blazing, shooting off at the first trades that come your way. I really, really say wait. Be patient. There's a lot of reasons why. Number one, we don't usually get good price action on Mondays. From my experience, Mondays are typically blah. Why are they blah? Well, a lot of times the institutional traders, they don't show up till Tuesday. Why? Because they're rich and they don't have to show up. I mean, think about it right now. If you had $5 million in the bank, would you show up if you didn't have to? Probably not. You'd probably take a 3-day weekend every weekend. Nothing wrong with that. You can make more money trading at the right time within just a 30-minute structure than you can sitting here for 24 hours on a Monday trying to eke out a few pips at a time. So here's what I say. Here's how to handle Mondays. Trading's all about momentum. I want everybody leaving Monday probably with just a few ticks or at break even or down a little bit, but ready to go for Tuesday, Wednesday, Thursday. That's when we drop the hammer. That's when we trade. That's when we get after it. Bottom line. So how do we do this? Trade to a positive. Maybe instead of taking a 1-3 or 1-4 payoff on a Monday, maybe we just take a 1-1. Maybe we just take a few pips and try to build that account and start trading with other people's money as fast as you possibly can. That's how I was trained. My first mentor, leader of the 7V Bar trading group, Gary Vernier, he traded on Wall Street, and he was a big shot for a while, trading crude oil, made a lot of money. And he said, listen, on Monday, you cannot go into a hole. Don't go into a hole. Now, you're going to have to take risk, and you're going to have losing Mondays, believe me, but don't flush 5% of your account on a Monday, 8% of your account on a Monday. If you have a $5,000 account, don't lose $1,000 on a Monday. Why? Because you'll spend the rest of the week digging out of that hole. And that's absolutely what you cannot do, or you're going to find yourself, number one, getting tired, number two, getting frustrated, and number three, you're going to be so conservative the rest of the week trying to get back what you lost, you're going to miss some damn good trades. I don't want that for any of you. I want you to be optimistic and ready to make money every single day. And what that means is you got to have positive momentum. So we're going to game plan for the week ahead. We've already shown you some of the plans for this week. I'm going to show you one in the S&P 500 here in a second. And we're going to try to generate momentum. We want on Fridays, no donation Friday. We want to take money home and preserve momentum. On Mondays, we've got to get the rock rolling. The way that I like to do it is take good trades, no marginal trades on a Monday, good trades, regular leverage, but maybe take smaller profits than I would on other days. Why? Because I want to rack those numbers up and make sure that I leave Monday at least at scratch, hopefully a little bit positive, because I really want to trade aggressively Tuesday, Wednesday, Thursday. That's typically the psychology of a Monday for me. And I'll tell you what, Mondays, that first trade of the week is very difficult to do. You got to be very, very careful. You don't want to lose the ranch on your first trade of the day. Believe me. All right, news of the day today. Today was a sort of a rare day on the stock markets. We saw durable goods orders come out before the market. Rarely on a Monday do we have any economic events at all. Durable goods. I'll give you the long and short of durable goods. Basically, these are bigger ticket items. So you're buying your washing machines, anything you have to finance. That's a general rule of being a durable good. So you're looking at like washing machines, refrigerators, ranges. Maybe you're going to buy something fancy for your house, or maybe the apartment, you want to outfit it and you need to finance it for 6 months or something. I know people that buy rugs. They finance rugs because they get real expensive rugs. I don't. I don't even like taking my shoes off in the house, but I have to. I have a significant other and she keeps me in line. But in any case, durable goods, that's what that is. Those are bigger ticket items. Today was a big number. We're going to skip the first number except defense. I don't really want to talk too much about that because we get into defense spending and that turns into a big thing. But durable good orders except transportation, that's the interesting one. That's the one without your cars and your airplanes. Typically your aircraft are a big deal. But durable goods orders, period, with everything cooked into the books is 9.9. 9.9, not too bad. That's well above 4 and well above the previous release as well. So when we look at these figures, I say, okay, that's pretty darn good stuff. That's a positive number for durable goods, even though there are some outliers in there that maybe we could factor in and say, yeah, it's not as good as we think. Let's get it right from the horse's mouth, the U.S. Census Bureau. Remember, it's an election year, and the U.S. Census Bureau most certainly works for the U.S. government. I'm just saying, I'm not down on the government that much, but I will say that last week, those NFP numbers, if you don't doubt the numbers coming out of the U.S. government right now, I can't help you. Think critically. If you're going to be a trader, think critically. News of the day, here it is. U.S. durable goods, right from the horse's mouth. New orders for manufactured durable goods in the U.S. surged by 9.9% from the previous month in July of 2024, making up for the downwardly revised 6.9% decline in the earlier period, the most since May of 2020, and firmly above market expectations of a 5% expansion. The result challenged growing pessimism over manufacturing activity. So is this a big deal? Yeah, it came in better than expected. That anytime a number comes in better than expected, you've got a chance maybe to outperform, at least on the markets. Now, news of the day, is this really the news of the day? Yeah, it is. Yeah, it is to begin the trading week. I was looking at headlines earlier. I didn't see much on CNBC, nothing we're going to cover. But this is a good look at really what happened since that COVID era. We're very much in the post-COVID era. And what that means is right there, durable goods dropped down to nothing in 2020. That's March of 2020. In April, basically the world stopped, and that's, in a lot of ways screwed up our economic numbers ever since. Now, did this turn into the new norm? No, it bounced right back. But look at the high. This was sort of a euphoric high that came on later in 2020 after we started reopening parts of the world, or some parts faster than others. What did you see? A major spike in this number? Why would there be a major spike in the growth number? Because it's not hard to grow from 0 or negative 18. That's why. That number right there, throw it away. It means absolutely nothing. Shane, why are you talking about it? Because today, look where we're at. If you draw that line right across there, you're right back there to that immediate post-COVID era where all that money's hitting the markets. All that money, all that stimulus cash, all those loans, all those what are those PDE loans? I can't even remember what they were called, but all that stuff started hitting late 2020, and look where we are. So that's major consumption. That suggests that there's not even going to be a recession. You're in a period of economic growth. That's exactly what that suggests. So interesting stuff right there. Do I think it's a big deal? Well, I think it's a big deal for U.S. stocks. You can see U.S. stocks sort of holding on, I would say, but very much in an uptrend. This is a good look at a 4-hour chart for the U.S. 30, which I never use. So I don't know that I would be using a 4-hour chart to trade the U.S. equities. Why? Because the volume's all during the U.S. session. That's why. We'll talk about that in a second with a smaller chart. This is a trade idea that I put out earlier today. You can see the all-time highs back here. This is the U.S. 500 CFD. Your numbers are going to be a little bit different, so just understand how the charts work. What do you got right up there? Well, right there's a spike high. There's another high. There's another high. That's 3 days where we really hammered that 56.69, 56.70 area relatively hard, and those are right now standing your all-time highs. In my view, we're going to take that out. So the trade idea was real simple. We want to short right in front of that zone. Why? Because there was sellers there before, and I would be shocked if there's not sellers there again. So I'm watching relatively closely there. I think we're going to get the selling pressure to step in. I don't believe that's going to be the top of this market, but for a short-term scalp, it's going to be a relatively decent trade. Check out that trade idea that I put in the trading room. Check it out, and that gives you everything you need to know about how to execute the trade, including your entry and your profit target. I would keep that one at about a 1-to-1 risk versus reward ratio. You don't want to lose the farm just in case we get a big-time breakout. Okay, so 30-minute chart. This is my bread and butter, really, for the U.S. equities indices. You'll see we're still a ways up there to that all-time high. Do we get there today? I don't believe so. Here was a trade that I took a bit earlier today. Right there was your 7:30 opening bell ding-ding on Wall Street. Spike high. What happened there? Spike high, spike low. And then your pullback, and we got a little bit of retraction there. I actually stepped up and sold 38% right on the nose. And if you want to go to a 1-minute chart, you'll see that it got a little dirty in there for me, and I got paid right there. So I was just looking for a little bit of really a stutter step, and now we sort of rotating. I don't know where this market's going today. If we do look at the chart, if we look at our intraday chart for the U.S. session, it does look like a downtrend. However, I would take a look at the overnight action here. I wouldn't get too carried away with exactly where we're at with regards to a trend. Did we break down? Yeah, we did. But where are we at? Man, we're almost flat. We're almost at negative. We're only down negative 0.10%. This has all the fixings of a rotational day. So what I would recommend, I don't think we're going to go much lower. I wouldn't be selling Fibonacci's like a trend anymore. As far as I'm concerned, the trend is in very, very much in question right now. Unless we pick up and start moving again at the end of the day, I wouldn't be doing that. But here's what you could do. If you guys are familiar with the pendulum, I'm going to show you a pendulum right now and sort of give you a good idea of what maybe a trade you can execute later today towards that U.S. close. So the pendulum, great strategy. We're going to do a lot of strategy stuff this week. Be sure to tune in for a strategy-specific stream if you want. But something like this, there's your topside resistance. That's your U.S. high. Right there, there's your downside resistance. Swing high, swing low. What we're waiting for is a test of either the swing high and then a 10% retracement, and then we're going to sell. Or we're waiting for a test of that swing low right there, a 10% bounce, and then we're going to buy. Right now, it looks to me like we're going to we have a better chance of pushing the lows than the highs. I would love to sell up here and take that trade, maybe going into the overnight and just get the trickle effect. I think more than likely we'll get a test of the lows if we get anything at all. So if I'm looking down here, I'm looking for a sort of a test in the vicinity of 5608. I would probably give it maybe 10 ticks either side. I would say you could probably, maybe not 10 ticks, maybe 8. Once again, it's your judgment call, but I want to see this zone tested. I want to make sure that that's valid before we just get maybe a big move and then I sell and get caught up in a downtrend, late day sell-off. I don't want that. I want to see a nice test, and then I want to see my 10% bounce. There's my entry, and then there's my profit target right there. So that's what we're looking at for a late day pendulum. That's a pretty darn good trade for a US 500. Those late day trades, especially with a real nice range, we got a solid range, 5650 down to 5608, something like that. Pretty good stuff. Pretty good stuff. Now, if you're in the United States, you're going to be executing that trade on the E-mini S&P 500. This is the #1 futures contract in the world. It's got pretty good volume, I would say. Let's see, the last 30 minutes, we've traded about 47,000 contracts. That's a tremendous number, especially for what is lunchtime on the East Coast. So in any case, pull back right here, 38%. That was the sell we got earlier. Really a nice big baggy range. I like this range. If, in fact, you wanted to execute this trade based on that pendulum strategy, Mario Singh's pendulum, be sure to visit the How to Trade trading room. Get involved if you can. Take a good look at what exactly we're doing and how exactly you can capitalize on what I would call a relatively strong price action strategy. We've got a video in there. We've got everything that you need to trade this thing with, I would call, a little bit of confidence. I think we've got everything for you. All sorts of PDFs, dossiers, the dossier. We got the dossier out. We got the dossier out on the pendulum. In any case, right there, nice big sell-off. This one's sort of coming our way here in this futures contract. I love the E-mini S&P 500 futures. Nice deep contract. You'll notice right here. Let's go ahead and hit trade. I think we can hit trade. Nah, I'm still hooked up to the competition. We'll trade a little bit tomorrow live. We did Friday. You want to see a winning crude oil trade with real money? Go back and look at Friday's stream. We nailed that one. In any case, right here, getting a little bit of pricing action. We're looking for a test down there at 56.26.5. I would be looking probably within 4 to 6 ticks. I want to see a hard test of that and then a bounce, and this would be absolutely fantastic. Buying 30s on the way back up. Maybe we get that into power hour, a little bit of a rotation to the top side, and that'll pay us off here for our E-minis. E-mini S&P 500, one of my favorites. Definitely like it. All right, guys, we got a lot going on this week. Most of it's going to center around, your interest rate expectations. I'm going to talk more about this tomorrow, but for the September meeting, September 18th, you're going to have this right around 5 to 5.25. That's a 1/4 point rate cut, and right now the markets are saying there's a 70% chance of that. That's pretty good stuff, so definitely keep an eye on this. We're going to unpack all these expectations for tomorrow, along with crude oil. We're going to dive into crude oil and commodities. The gold market here, we'll close with gold. I just want to really touch on gold briefly. This is an uptrend. This is a macro uptrend. This market is going up about as fast as gold's gone up ever. And you can see right there, that's a monthly chart, and that is an absolute banger uptrend. For those of you that have been watching these streams for the better part of a year, you remember that triple top. We knew we had a double top set up beautifully there. We had a great sell, made a lot of money on that trade, and then we're looking to go higher from there, and that's exactly what we had. We knew once we broke that triple top right around 2,000, the sky's the limit, and now look at where we are. We're north of 2,500, and we are rolling to the top side. For me, I don't really see – the only thing that I would say resistance-wise is going to be big round numbers. So 2,600, and you're going to have to dial these in exactly. 2,700. For me, probably the next really big one is going to be the quarter handle up there at 2,750. I would say that that's going to be definitely a hotly contested area. I believe we go there. I just don't really know how long it's going to take, but I would definitely have that on my pricing chart. You're going to want to make sure that you know exactly where that one's at. That's going to be a key area of natural resistance. Now, how do I want to trade this thing? I'm not interested in selling anything right now. I'm not. Not when it comes to gold. So you're looking right here. There's your daily. Do you really have any way to bid this thing right now? Not really. Let's go to a 4-hour chart, and maybe we'll have decent market structure, and maybe we'll be able to bid it, and we just don't. What I mean by that is my Fibonacci's would tell me to make most current spike to most current spike. Spike low, spike high. You can see we're just dead. We're rotating in the middle. So essentially what I'm going to be waiting to do is if in fact we do get a break this week, of course I'll have a weekly chart up, and we can outline levels like this till the cows come home. The real problem is do they ever come into play? And we're not going to be using a pendulum for this one. We want our straight up trend following Fibonacci with Golden Zone. I believe the Golden Zone strategy is going to be coming out this week. So that's going to be posted on our YouTube channel. Don't miss that. We show you how to trade that Golden Zone, which is the 62% area and the 50% area. We're going to look to bid pullbacks 24.68. That's great if we can get it. I just don't know that we get it this week. But that would definitely be what I would call my kill zone, 24.70. That's a high probability trade to look to make, at least $2 to $5 to maybe $10 on the trade. Full macro move. It's very good. Buy-in dips the whole way on gold. We just have to wait for this to set up a little bit. We don't have really anything to do here on the daily. If we want to be hyper aggressive, we can do that. Shane, I got a car payment to make. I need to trade. 25.05 then, 25.06 even. Maybe that's your trade going into Tuesday. Personally, I'm waiting for him to push all-time highs, and then we're going to get some great market structure on the 4 hour. So that's what I'm looking at as we roll into Tuesday. All right, everybody. If you don't have an account already, check out Switch Markets. This is where traders come to trade. This is our sponsor. This is our partner broker here for the competition. They're putting up the dough, the prize pool, the 5 to 3 and the $2,000. Got all sorts of stuff here. We've got, realistically, there's all sorts of deals. And I get this question a lot. Private message, Shane, where do I go to get a demo? Right there, free demo account. If you want to trade real money, go live. And if you need any help at all, you click on the live chat. You get in there, quick start guide, and then you also can get somebody on the horn relatively quickly. All right, everybody, I want to thank you for joining me on this fine Monday. Remember, Mondays are all about momentum. That's all there is to it. Get in there, make some good trades, high probability setups, regular leverage. Maybe you take a little bit less money than you normally would shoot for, but get off on the right foot. I want Monday to be a great day. No stress on Mondays. We're not digging a hole on Mondays. No pressure. Tuesday, Wednesday, Thursday. Then we're going to crank up that heat dial, and we're going to crank up the pressure and see what everybody's made of. I love Tuesday, Wednesday, Thursdays. Live for them. All right, everybody, I want to thank you for joining me today. Mark Corp, always a pleasure. Bobby Bob, always great stuff. We're going to dive into crude oil and natural gas tomorrow because they are alive and well. But for right this second, I think that our best course of action is to prepare and game plan. Get ready. Buckle up. This is going to be a big week. All right, everybody, trade the action well, and we'll talk soon. See you.